Do you want to get rich? Of course you do. Otherwise, why the hell are you even watching this video? But how? Well, there's the lottery. There's meme coins, which is kind of like the lottery. Or we get a pointer or two from legendary hedge fund manager Ray Dalio, and multi-billionaire, might I add. So stick with me for the next few minutes and maybe you'll pick up a thing or two. But who exactly is Ray Dalio? Why should you care what he has to say? Ray Dalio is the founder of Bridgewater Associates, the largest hedge fund manager in the world. Well, sometimes the number 2 position, but who cares? The thing is, Ray Dalio is the man who propelled the firm to be a respected name in financial circles. Ray founded Bridgewater Associates in a 2-bedroom apartment in 1975 and grew it to be a company that has $124 billion in assets under management and one of the best performing hedge funds of all time. His billionaire status, though, did not come overnight. In fact, he was a kid who grew up in a middle-class neighborhood in Long Island. However, unlike most kids, he got hooked on investing at the age of 12. Come on, people, don't let your kids get into investing at the age of 12, then they'll end up becoming billionaires. It's a real problem. Anyway, he saved up money made from caddying for people in the golf field and bought Northwest Airlines stocks. And to make the story short, the venture tripled his money. And the rest was history. He was hooked. One of us. Anyway, his current net worth is estimated to be around $15.4 billion. Through the years, he's imparted his financial wisdom to a lot of people. So let's look at 7 of his principles. And one of these principles is to constantly think about how to use leverage. If you're a longtime trader, you've probably used leverage or borrowed money to augment your capital. But for Ray, it goes beyond this. It's all about achieving more with less. It's all about prioritizing activities that generate the most significant returns for your time and your investment. For example, we can use technology as a leverage for investing. Many investment apps now allow you to monitor your portfolio, research stocks, or even place trades right from your phone. These apps can literally save you time and money. That technology is a leverage, and that technology allows us to connect with people who are knowledgeable in investing, to see videos like this, to go and follow Ray Dalio on Twitter and hear what he has to say. It's crazy. Building connections with like-minded people, of course, is one of the most underrated forms, most powerful forms of leverage. Learn from people who have years of experience in investing. Get in those groups. Find people to talk to, learn from them. And speaking of leverage, let me interrupt the flow here real quick to let you know about the best damn newsletter in crypto. Every single week, my team of researchers and I are bringing you the Wealth Mastery Investor Report. We have all the latest insights and news on meme coins, altcoins, airdrops, deep dives, NFTs, technical analysis, and much, much more. You can join our 135,000 plus weekly readers for free and sign up using the link in the description or the pinned comment over on X. Our readers love it, and I'm sure you will too. Go check it out. Now, another Ray Dalio hack is building an all-weather portfolio. It's an investment strategy that performs well regardless of the economic climate. I know what you're thinking. I'm 99% in crypto here. What are you talking about? Anyway, it's like having an umbrella, or if you want to be extreme, a storm cellar that protects you from any type of tornadoes or bad weather. His idea is to spread your investments across various asset classes that have historically performed differently under different economic conditions, or as they say, don't put all of your eggs in one basket, especially for protecting wealth. Building wealth, you might want to concentrate, protecting it, basket. Under this strategy, the typical portfolio will have stocks, long-term and medium-term bonds, gold, and commodities. Well, I know, guys, again, a lot of you are crypto maxis. You would argue, look, futures Bitcoin, futures Ethereum, and you can't be bothered with other asset classes. But think of a 4-leg stool. Each leg represents a different asset class in your portfolio. If economic turmoil weakens one leg, the other 3 legs can keep the stool upright. That's kind of how I think about it. I own some gold. I own some stocks, okay? Stuff like this. So it might seem boring, but it helps me sleep at night. So putting some of your crypto gains into some boring dividend yielding stocks, some boring bonds, or even some precious metals can be an insurance policy for you in case we see FTX style collapses or any other crazy, okay? Here's an example. In the Avengers Infinity War, one of the Infinity Gems is the Reality Stone. It grants any user the ability to manipulate reality itself. So with it, you can erase stinky fiat, make sure that Bitcoin being the best option, accepted as the world currency, et cetera, et cetera, et cetera. But of course, there's no such thing, right? Thus, Ray Dalio advises you that we embrace reality, okay? In his own words, Ray is a hyper-realist. He appreciates reality, whether it's good or bad. And a lot of investors have a hard time accepting reality. Now, this emphasizes basing decisions on unbiased analysis and critical thinking. So, for example, the chart shows that Bitcoin is the safest crypto asset class and has beaten traditional assets in terms of returns since its creation. Bitcoin's programming makes it deflationary, and its network has not been hacked. Okay? Yet some people still dismiss it. Wall Street is buying more Bitcoin than the miners can produce, yet some people still won't touch Bitcoin with a 10-foot pole. It's illogical. That is an example of not embracing reality. That is an example of sticking with what you think is correct, even if you are proven wrong. Okay? Being a hyper-realist means recognizing that financial giants, sovereign funds, countries are buying Bitcoin. Maybe this is an asset class that everybody should consider. By the way, Ray is a Bitcoin fan. Anyway, just take the damn red pill or the orange pill if you want and see the truth. The fourth Ray Dalio hack is closely related to the third one, and that truth is the foundation of good outcomes. This emphasizes that all of our decisions should be made after understanding reality rather than emotions, rather than personal opinions. This is the reason why most businesses look at numbers closely, because numbers don't lie. Nobody can say that a company is doing great if the sales have been declining for several quarters. So instead of hiding the truth, you look at what's causing the decline. In the same way, you have to take a hard look at your finances, take a hard look at your portfolio, your crypto coins. I know some of the stuff. Is that dog coin really going to make you a billionaire? And if you're not hitting your investment goals, of course, you have to ask yourself, why? What's causing this? Where do you keep losing money? Where do you keep screwing up? Where's all your money going? Is it because you've been using all your excess funds to bet on low cap altcoins without doing any research? Somebody mentioned something on Twitter for 5 seconds and YOLO in. Come on, man. Or maybe you're buying too much fancy crap, too many $10,000 watches, too many $500 shirts that you cannot afford. Now, if you're rich as heck, who cares? But if you can't afford it, that's a different equation, right? At the end of the day, all your decisions should be based on the truth and nothing else. And that's a hard conversation to have with yourself sometimes. We love lying to ourselves, but the truth will set you free. Now, the fifth one here is being radically open-minded. Now, according to Ray, most people would have an easier time being assertive, but would have a hard time being open-minded because it's easier to convey how we see things rather than see how other people see things. But because of being closed-minded, people miss possible learnings. One classic example is how humans have always been afraid of new technology. People were afraid of airplanes. People were afraid of telephones, of microwaves, of Wi-Fi, even electricity. Go back and look at some of the old electricity scare articles from back in the day or cartoons. Everyone's going to die from electricity. People didn't understand how these things works. They didn't know that the human body would not be ripped apart from flying at high speeds and the telephone would not electrocute them, all that kind of stuff. Today, if we look hard enough, we'll be presented with several once-in-a-lifetime investment opportunities in AI and, of course, in crypto. Bitcoin, for one, has all the features that could make it a major global asset, perhaps a strategic asset for countries, more so than it is already. We also have AI, we have DeepIn. All these things could inject trillions of dollars into the world economy. Worth paying attention to, right? New technology innovation is here. Next is that pain and reflection will lead to progress. Now, according to Ray, pain or failure is inevitable if you're after ambitious goals. Get used to it. It's gonna happen. In 1982, Ray predicted a depression based on his research. He gained fame, but he was proven wrong. The market recovered. Bridgewater nearly went bankrupt. He had to swallow some big humble pie, but instead of giving up, he recognized his mistake. He rebuilt his company. He now sees all failures as a chance to do better. Most people don't learn from their mistakes and keep making them. He learned. Now, in the last bear market, a lot of people lost money, but it was a chance to look at the mistakes made as well. If you could be reflective and get out of the pain. For one, crypto investors now know that exchanges can collapse, especially if you're new to the cycle. Older investors know that. A lot of people flocked to self-custody wallets. Today, investors have also realized that carefully investing in the bear market can be a very, very profitable proposition once the bull market comes back. And our last one here, very important, own your own outcomes. It's quite simple. You're the only person, you, that are responsible for your success or your failure. Instead of blaming random people on the internet for your mistakes, take responsibility for your own research and your own decisions. You're the one clicking the buy and sell button. Don't blame celebrities. Don't blame internet financial gurus, influencers, any of that kind of crap. It's all up to you. As an investor, it's up to you to assess the risks and the rewards associated with any investment decision. You have to be an adult. And if you can't do that, maybe investing's not for you. Right or wrong, it's all you, okay? Ray Dalio is an extraordinary person at the end of the day, and he comes from an ordinary background. And look, he was able to build his wealth following these principles. We now have his roadmap. The question is if you're willing to follow in his footsteps. I hope you get rich. I hope you make money. I hope you do incredibly well financially. And I hope that these tips can help you think about the things that are holding you back from achieving those goals. Because remember, Ray was just an ordinary dude. And guess what? 80% of millionaires, they're self-made. They're people who came from nothing. Could that be you? Are you one of those future 80% of millionaires who came from nothing? Are you going to be the person who changes the direction of your family? You can be. It's all there. You just have to act on it. Thanks for watching.